to our Momentum Multifamily Member Spotlight. We're super excited to be joined here with Kari Myers. Kari, thank you so much for joining us today.
Oh, thanks for having me. Glad to be here.
Yeah, absolutely. We'd love to just kind of learn, a little bit more about yourself and your background first, to kind of let people know about what got you into real estate.
Well, I think when I was 19, this is 20 years ago, I'm dating myself, but somebody gave me a copy of the book, Rich Dad, Poor Dad. And just that opened my eyes of seeing the different asset classes and liabilities. And I just thought I need to get on board the real estate train as fast as I can. So I bought my first property age 22 in Toronto, and I just seemed like I was making more money in real estate than a day job. So I need to, I started going to conferences, anything like about tax liens or notes, just trying to learn and just kind of get a wide view on the industry. And then I met a lady named Nancy Labs, who she wrote a book called Women Making Deals in Heels and the Profitable Landlord System. And she invited me to a mastermind group. So I met with those ladies once a month, and we had lunch, and we'd read a book each month and just talk about what we're doing. And so it's just been a good experience for me, flipping homes and then keeping tenants in the properties as well.
Awesome. And you're involved in multifamily? Is that a more recent thing for you? Okay. So yeah. How are you involved in multifamily?
Okay. Yes. So actually, Nancy she asked to interview me on female landlords. And in the interview, it came up that I mentioned, well, I thought natural progression might be to get a 5-plex or 9-plex, something just on my own. And she said, well, before you do that, you might want to meet Kaylee McMahon, because I think you guys have a lot in common. You have the same kind of energy and you both like outdoors. So she does all these meetups around DFW. So just try to go meet her. So I did. And Nancy was exactly right. Kaylee's awesome. So this was about a year. It was before COVID lockdowns. It was last year, 2019. So Kaylee invited me to drive out with her to West Texas and see her apartments. We talked, so it was 8 hours total, just chit-chatting both ways. I didn't know what a GP is or LP. I didn't know waterfall distributions. I'm like, I have a lot of things to Google when I get home. Kaylee's just been very instrumental in teaching me. So I invested in her deal in Fort Worth, which is the 22-unit value add play. And then since then, I've invested in 4 more, in Fort Lauderdale, a value add, a hotel to multifamily conversion in Kissimmee, and one in Denver and one in Austin. All those are Class A new builds. So places I like to go, Colorado and Florida. So now I have a tax deductible reason to go there.
That's awesome. Yeah, it sounds like you're interested in, heavy lifts and all the way up to the newer stuff. So what do you look for in a deal when you're considering investing?
The location, the sponsor, and the deal structure, I guess. So I like, of course, tax-friendly states and a sponsor that has a good track record, and then the deal, if our interests are aligned with the way the structure is. And I'm still kind of learning. I just kind of jumped in because I trusted Kaylee, and so I'm kind of learning as I go of how to better analyze a deal, and I'm taking some courses on it as well, so I can do not just totally put money into any deal, but.
Cool. And so kind of, you've gotten some experience and, kind of looking forward this year and moving past that. What are your goals moving forward?
So my goals moving forward is just to do more deals as an LP. And this is the year where I feel like I'm actually an investor, because I'm taking my single family homes and leveraging against them now. And I'm realizing, borrow at 4.5%, turn around and make 7 to even maybe 20%. I know 20% sounds really high, but of the track records of GPs I've looked at, that doesn't seem too far off for an annualized return. But even if it was 10 or 12%, that's still real estate as an asset class with the deductions you can take, cost segregation, bonus depreciation is still, I think, better than making 10 to 12% in a stock market. So, and it just seems like less risky to me because I know real estate, whereas other people might think that real estate is more risky because they know the stock market, but it's which whatever you're most comfortable with. And since I'm already familiar with real estate and I have a little bit of a, I have found it to be much more predictable than the stock market, and it's slower moving. So I like that. I'm going to continue going to conferences. I'm going to the Rebel Capitalist Live in Miami, and there'll be some people there that are speaking that I write. Jason Hartman, and then Ken McElroy will be there, who's an advisor to the Rich Dad Poor Dad, Robert Kiyosaki. So I'm just always love to meet new people. I think what I love about the multifamily space is there are people like you guys that are always meeting new people, and I've not met anyone that I don't like in multifamily. It's just a lot of people are trying to better themselves, not just in real estate, but also they like to hike or they cycle or they do triathlons. They're just good people. So I'm going to just continue on this path, and then I'll have some capital to deploy in about 3 weeks after these appraisals get done. But I've chosen the loan option, going with Old Capital as a recommendation of somebody at a conference that I met in Houston. And then keep on reading my books. Keep getting educated. Shout out to Kaylee's book. And then this is a great one, The Hands-Off Investor by Brian Burke. And then this is another one I'm working on. In case any of your viewers, this one is just chock full of terms. I'm just trying to get on the back of my hand just to know inside out so I can be quicker with my calculations. So yeah, that's 2021.
So I guess. Oh, go ahead, Hayden.
Oh, sorry. Yeah, my headphones died on me. But so if people have questions, we'd love to learn more about, how can they connect with you? Because I'm sure your story, many others out there want to follow in your footsteps. So is there a way that people can connect with you?
Mm-hmm. My website is krm-ventures.com. That's my initials, krm-ventures. And then my email is admin@krm-ventures.com. And I'm on Instagram. I don't post too much, but that's krm_ventures.
Cool. Awesome. Well, I appreciate your time. Appreciate you willing to come on here. And then it's been great getting to know you. Looking forward to some more hiking adventures here before too long. So great. Appreciate your time.
That'll be great.
All right.
All right. Thanks for featuring me. Okay.